Hello and welcome to BullionStar. I'm Claudia Merkert and today I'm joined by Florian Grummes, founder and managing director of Midas Touch Consulting. They are one of the leading analysts in the precious metals and cryptocurrency space. Florian, thank you for joining us at BullionStar. We're so grateful to have you here today.
Thanks for having me, Claudia. It's a pleasure. Thank you.
I'm really excited to hear your take on what you think's in store for the markets. Now, in most precious metals interviews, gold is typically the opening headline. However, today I want to start by talking about silver. Silver has been frustrating a lot of investors lately, and gold has been making big moves. But since last week, silver looks to have finally broken out of its 13-year resistance levels and is trading above $35. So how much conviction do you have in this breakout? And do you think silver's finally ready to catch up to gold's big run?
Yeah, that's an interesting and important question on the minds of many investors these days. It's true. Silver is trading at a 13-year high. It took quite a while. I've been writing in many papers that I expected a breakout over the spring, early summer kind of period. It came a little bit late this year now in early June. Gold is already in a consolidation, in a multi-week consolidation since 22nd of April. But here we are, silver finally breaking out above this strong and important resistance zone, 34, 35-ish kind of dollar, and quickly ran up $2 over the last few days. So it looks promising. In the very short term, it's going to be interesting to see. We have basically an embedded super bullish stochastic setup on the daily chart. So usually that should continue to run higher. But of course, at the same time, the silver market is a little bit overbought here. Typically, if you get these run-ups in silver, they should last at least 2 or 3 weeks, maybe 4 to 5 weeks. And the best case scenario, so to speak, would be that we're going to see silver running towards $50 rather quickly here. Of course, I don't have a crystal ball, so everything's possible. And we've seen silver breaking out at lower resistance levels and then just posting a 1 or 2 week rally in the last 15 months. So, I mean, generally, you should be always a little bit cautious with the markets. If we see a clear turnaround signal, it could be also that it comes back below 35. But I doubt it. I think we are in this breakout stage now. And I think the chances are very good that we're going to see a really nice breakout rally now towards at least 38 to 40. And then in the best case scenario, as I said, $50 in the short term. However, gold looks a little bit tired, which is totally justified. I mean, it's been a crazy run up over the last 15 months since the breakout above $2,070 last February 2024. So huge run up. Yes, it needs to basically pause, breathe, take a little break here. However, we know that once silver shows up to the party, usually it means that the end of some form of rally segment in the precious metal sector is coming to an end. So that also means that if we see silver now really going nuts for the next few days and weeks, it probably means that we will see a little bit larger multi-month consolidation in the sector, generally speaking. The issue with silver finally shows up. Everybody has been waiting for it. It's been testing all in any patience that anyone had, and then finally shows up, and it means actually that it's the final inning of that leg higher in the precious metal sector. So that's what it is. But yeah, I think we are in for a nice ride the next few days at least.
And do you think if we were to break the $50 level, that would shift how major institutions would be viewing silver as more than just a poor man's gold?
Yeah, I'm very sure this will happen over the next, let's see, say 1 to 5 years. I think we're going to see a breakout above $50 in silver, and I think we will see 3-digit silver prices. And of course, once you have a bull market, a rally, prices going higher, the perception of everyone and also of the institutions is changing. It's always the same. The markets, in the end of the day, are mass psychological phenomenons, right? So once people seeing an uptrend, they're starting to wake up, wow, I want to be part of it. And then they run behind the train, basically, or try to get into that market. And it doesn't matter if it's institutions or retail or wealthy private investors. It's always the same. So, I mean, the perception is already changing step by step, simply also due to the fundamental macro kind of setup. We know that this is like the 5th year of deficit in the silver market and lots of future potential demand sources coming to the silver market while supply sources are difficult to ramp up. Basically, no real new mine is coming online over the next 1-2 years. I think the setup is wonderful for much higher silver price down the road. And of course, we're going to test at some point this $50 level for the 3rd time in the last 50 years. Normally, in such a long time frame and such a strong resistance, I would be surprised if it can slice through and directly run higher. Okay, normally you would expect a run to 50, maybe touching it and then pulling back and going into that multi-months kind of correction or consolidation kind of period, which I described before. But of course, I mean, once this train has really started, I mean, go back in the 1970s, from 1978 to 1980, silver ran from $2 to $50 without really looking back anymore. So that's also a potential scenario. What do? I mean, you keep your physical silver, obviously, right? You keep stacking, you're buying, and you hold it, because I think the $100 level is certainly a very realistic price target over the next few years. And if you compare where the gold-silver ratio has topped in the last bull market of the 1970s, around 15, you can make the case that at the end of this bull market in a few years, silver might even touch $300, $400, $500. So for a physical investor, it's nice to see if silver touches the $50 level. There's no reason to sell. And yeah, you just keep holding and stacking.
So just going back to a point you made earlier about the supply deficit that's existing in silver for the last 5 years, could you imagine that if silver breaks out really hard, we could see industrial users start to panic or stockpile and try to get their hands on as much silver as they could, compounding a potential supply problem?
Could be, yes. We've seen that in the past in other markets. So like I remember the nickel markets. Often actually it is one of the big players is on the wrong side of the market that really kicks in. Like you get a little bit of a short squeeze. And maybe somebody has promised material that he doesn't have, and then he has to buy it in the market, and he's basically short, and that basically forces prices even higher. Yeah, of course. I mean, silver is such a small but still very essential part of many of these electronics, of cars, of cell phones, whatever, but they need it. So it could be that once prices really start running higher, that some of those industry magnates may think like better to buy now to be safe. We have the silver for the next 2-3 years instead of waiting until it's at 500. Could be, yes. The important part in this whole fundamental supply demand analysis for the silver market is the investment demand, which has been rather dormant over the last 10 years. And this will be the kicker. I mean, if this really kicks in, investment demand, people, institutions, retail, high net worth individuals really going into these silver ETFs, this can drive the market crazy in a very short period of time.
And you've just mentioned now, and again, previously, I've seen you mention in other interviews that there's the possibility that silver could get to $500 in the long term. Can you walk us through how you arrived at that projection?
Yeah, I just laid it out with the gold-silver ratio. Gold is trading around $3,300 at the moment. We had an apparently short-term top in April, but it's still holding up well above 3,000. We know that none of the issues that drove gold here are being solved. So the likelihood of gold going much higher is still rather high. We also haven't seen like a complete euphoria stage, which is typically the end of a bull market. We haven't seen that. Making the case that gold can go from here to maybe $7,000, $8,000, maybe even $10,000 over the next few years, I think it is a realistic scenario. We know that governments will continue to basically expand the money supply, and it's not only the US, it's the Europeans, it's the Australians, it's everywhere, right? The Chinese, of course, as well. So seeing gold doubling from here, I think is a realistic scenario over the next 2 to 5 years. Let's say it goes to $10,000 for the math to be easier. As I said, last bull market top in the gold and silver ratio was around 15. So you can make the math where silver should end. If gold is trading at 10,000, we have a 15 to 1 gold silver ratio. That's, of course, the best case scenario. In the top of 2011, the gold silver ratio topped around 35-ish, which still would take you to around about $300 silver if gold reaches 10,000, right? We know in the ground you will find probably 10 to 11 ounces of silver for every ounce of gold, right? If you talk with the big mining companies, they will tell you, well, we mine 7 ounces of silver for 1 ounce of gold, which is unbelievable where the market is trading. I mean, we've been trading at 100. Now it's coming down. It came down to 92-ish, the gold-silver ratio, but it's still completely away from the reality in mining companies getting out of the ground. It's a byproduct. It's a highly manipulated, small niche market, but it's coming. I'm very optimistic here. And again, I said it before and I say it again, keep stacking, keep holding it physically. Don't make any crazy things here. I don't recommend to trade silver with leverage. I actually don't recommend recommend to trade it at all. It's because it's a small, tiny market that has a lot of decisive moves all the time. The best and easiest and most successful way is to keep stacking physically silver. Yeah.
So if I understand correctly, you're saying it's a revaluation scenario that's tied more to deeper systemic shifts that's aligning with gold, as opposed to just a technical level to get to that sort of price point for silver?
I mean, if you're in a bull run, people do lots of crazy things and they just keep buying something that goes up and up and up because they see going up. So you will have a euphoria stage at some point. And from the past, we know that at the end of these bull markets, in this crazy final euphoria stage, silver will outperform everything and take over the mic and spike like crazy. That's what we know from the past. And I have no reason not to believe that this is not going to happen at the same time in this bull market. Look, this bull market started in 2015 with this low at $1,045 for gold. It took quite a long time to then get this breakout above 2070, which basically was last year in February. But we haven't seen silver really taking over. Look, 2010 was the last year of that bull market from 2001 to 2011, when gold went from $250 to $1,920. Silver kept following gold, sometimes showed up, sometimes basically took over for a few weeks. But the real big grand finale, if you want, was happening for silver in 2010. It started at $17, and for 9 months, without looking back, without caring what was gold doing in that time, silver went from $17 to $15. Relentless rally, wonderful for physical investors, also for silver mining investors. But that also was the end of that 10-year bull market in precious metals, you know. So something similar like that, I think, will come in the future, but we're definitely not here yet. And if silver would have now started, taking the example from 2010, back then it lasted 8-9 months, and taking the example from the 1970s, it lasted 2 years. So if silver would now start a relentless run higher, we were probably going to see this for the next 1 or 2 years, simply rising and reaching prices far ahead above $100.
Yeah. And so you think that $500 price frame could come within 2 years or more than 2 years without your crystal ball being out? Just
as I said, I don't have a crystal ball, but yes, I would say between 2 and 5 years, it's potentially possible. And it will be an overshoot. It will happen very quickly. And if people are not prepared to sell and make profits, it will happen. And a week later, we're probably trading back at 150, you know. So that's something people have to keep in mind. We're going to see a complete euphoria stage and overshoot in the silver price at some point. But we're far away from that at the moment.
Yeah, okay. Well, we're going to come back to talking about silver a little bit later when we talk about portfolio allocations, which I know all of our viewers will be very interested in. But at the moment, I want to talk about gold now. So silver's been getting amazing attention. Gold hasn't been really taking a back seat. In mid-January, you were predicting a gold price of 3,100, which we've sailed through. And in a recent interview, I heard you describe gold's price action as cataclysmic and nearing a blow-off top. So are we at risk of overheating, or is it just the beginning of a longer move on gold?
Yeah, well, I mean, look, now silver is showing up, so that is also a little bit of a warning signal in the short to midterm for gold. As I said initially in the beginning, it looks a little bit tired here. We've seen this top at 3,500. It was a wonderful, relentless, crazy, euphoric rally into 22nd of April. And since then, gold is kind of like trading sideways, one level lower, so to speak. So we've seen it basically trading back and forth between 3,120 and 3,400 and something to the upside. So that's a $300 kind of price range. And it dropped hard a few weeks ago and then also recovered rather quickly. We have a sell signal on the weekly chart, so I assume that this whole consolidation will continue. I have been writing in various papers that I think it's going to be a consolidation on rather high levels, most likely staying above $3,000. So far, that's what we are getting. We know that June is a rather challenging month for the gold price. Usually we get an important turning point somewhere in end of June or during early mid-July. And then we get a nice summer rally for the metal prices. It looks to me like gold still has some more corrective work to do. Silver has taken over now, so I would not expect too much from gold. Most likely volatile, sideways, back and forth, confusing everyone. Also gold, after this super clear trending higher, now it's a time where like everybody needs to be confused, I guess, so that the market it's ready for then the next leg higher. So if gold can find maybe a double bottom around 3,100 or 3,150-ish in the summer, that would be perfect. If it just meanders between 3,200 and 3,400, it would be also fine. What I want to see is an oversold weekly chart that would basically give me the confidence, okay, now we have the setup for a nice new rally that can last at least a few months and taking us back to the new all-time high. We also have open gap at 3,420 something, so there is a trajectory towards the upside. But what we've seen over the last few days especially is the Chinese are not really buying at the moment. So whenever I wake up in the morning, I see what happened in the Chinese or Asian trading session. And you can see like there is some buying, but it's not so strong like it used to be a few weeks ago. So probably they're just taking also a little bit of a pause and a breather here. But again, I don't think that we're going to see gold crashing here drastically below 3,000. Not at all. I think the worst case would be a quick dip below 3,000 just to shake all the weak hands, everybody who bought into late and is emotional about their gold investments. But that's already the worst case. So I think for a few more weeks sideways, maybe we see 3,200 again, but overall trajectory is still to the upside. And then I think we're going to see a nice summer rally. And that's going to be telling if we're going to take out the all-time high at 3,500, I think we can be bullish for the rest of the year. If not, we might have to be a little bit more patient. But the next price target at $4,000 is activated, and I assume it will come over the next, let's say, 6 to 8 months.
Okay. And so investors who might have missed that move to 3,500, can you just clarify, is now a good time for them to start accumulating, or should they be waiting for more clarity?
I'm not buying gold here at these levels, to be very clear. So I've been buying recently silver and platinum. I think those are the two metals who are now catching up and who are still extremely undervalued. Also, if you look at the gold platinum ratio, it's insane. I remember when I started as an investor in the sector 25 years ago, I mean, platinum was at least double the price of gold, So there's a lot of catch up for silver and platinum, and we talked already about this. So that's where my focus is in terms of purchasing and accumulating more right now. But I would be a buyer of gold again around maybe 3,000. I think that's going to be interesting again. I think it's been running ahead a little bit too much. Maybe it needs a breather. It's totally normal. Market's 2 steps ahead and then they come 1 step back, and then the whole thing can continue. So my focus is on silver and platinum here.
Okay. And now I've heard you mention before you've got an $8,000 gold thesis. Is that something that you still feel is realistic? And what would be the catalyst and timeline for that?
Yeah, I think it's very realistic. Obviously, time frame is always tricky, but usually, I mean, we are in an exponential curve in this whole bull market, also in the fiat money expansion. I don't think we have to wait 10 or 15 years for that. I think it's going to be within the next 2 to 5 years, most likely. So things accelerating. Yeah, I think 8,000 is realistic in 5 years. Probably faster. Probably much faster. And the reasons for it, the drivers for it, I mean, in the end of the day, people are losing confidence into the society, into the financial system, into their pension fund kind of structures, into the markets, into the currencies, in the fiat currencies. And so they need to find something that gives them some form of trust and stability. And that has been always gold for the last 5,000 years. Obviously, we are in a bull market. Once something goes up, more people become aware of it, and then more people chasing it, which intensifies the trend, which then creates more people who are becoming aware of it. So it's the normal pattern that we're seeing here. And I assume with volatility and with pullbacks along the way, but this is what's going to play out over the next 5 years. And I mean, the debt situation in most of the Western countries is so devastating, and there will be no other way than expanding the fiat money supply in the end of the day. That's going to be the big driver.
Yeah, exciting times ahead, really. Now, you mentioned the gold-silver ratio earlier. Today, the gold-silver ratio is around the 90 level, and compared to it was 100 just recently. So it has come down a bit, but it's still considered high by many. I'm wondering, are you adjusting your personal gold versus silver portfolio exposure based on this ratio?
Yeah, I have ramped up silver drastically over the last few months. So as I said before, I've been only buying physical silver in the last 6 months. And I think my holdings now are at 40% silver versus 10% platinum and 50% gold.
Okay. And is there a ratio that would make you want to rebalance back towards gold again?
Well, I mean, look, if we see a gold-silver ratio at 15, I probably would sell most of my metals. If the gold-silver ratio now would very quickly bounce to, let's say, 35, maybe I would reduce silver and move a little bit more back to gold. But no, my plan is actually to keep that allocation basically until the end of the bull market. So, I mean, if there is any big pullback in gold, I might be buying gold again, and then obviously the allocation percentage-wise changes again. But right now I feel comfortable because I think silver has quite a profitable journey ahead. But it will be volatile, it will be difficult. So as I said before, I don't play the physical market usually with trading. I don't play silver with trading. I only invest physical in silver because it's just so volatile and very difficult to trade.
Yeah, got you. So hold the physical silver. You've mentioned earlier that you're anticipating a summer rally. What would you think is the biggest risk to the rally? A stock market crash, deflation, or a geopolitical surprise?
Geopolitics, I think, is the main thing. So far, since the Hamas invasion in October 2023, it has been very supportive for gold, the geopolitical mess in the Gaza Strip and in Israel, than any other geopolitical mess, like more bombing in Ukraine or attacks in Russia, whatever it was. But of course, if we get a really devastating, dramatic increase in the military activity between NATO and Russia, for example, I'm not sure if that would be helpful. I think that's the biggest risk. I don't see it immediately, but it's obvious that unfortunately the warmongers are still overall in charge of things, and that would probably be the biggest risk. I don't see a stock market crash here. I think markets have nicely recovered since this little crash in late March, early April. We are probably getting closer to the typical summer doldrum kind of situation for the markets. Just understand, most of the investors in the markets are people with families, with a job. They take vacation in July or August. They want to hang out with the families. And then they have low volumes. And then, of course, your boss in the company will tell you, no, you don't trade as risky today because there's not enough volume. So automatically, the whole market, volume, trading activity, everything calms down over the summer months. And it's been the same for years. And that's why you have this famous sell in May and go away. Generally speaking, summer doldrums, most likely for the stock markets, things will calm down. That doesn't mean that you can have sharp moves and crazy volatility, but overall less activity, and usually you get also a pullback in the stock markets. 5 to 10%, most likely we're going to see something like this until autumn, which also will affect Bitcoin to an extent, I guess. But we are not there yet. This panic crash in late March, early April obviously took out so many weak hands, and so many doubters have been created through that pullback. So many skepticism in the market that probably there's still some fool for a little bit further rally here. But let's say July, August, and then into September, I've been a little bit cautious for the stock markets. And that would fit for the metals to show up again. And then typically, of course, everybody knows that pattern, but usually September, October, you should get a nice entry opportunity into the stock market for the year-end rally, which then again might create a little bit of pressure for the metal sector. So that's more or less like the roadmap that I have. But of course, we always have to be flexible and listen to the market and see what the market is telling.
Yeah. Well, I mean, given all the uncertainty, a lot of our viewers have been asking us how much is enough for their precious metals portfolio. What would you recommend in light of that?
It's an individual answer, of course. I mean, how much you're comfortable. Obviously, on average, most of the mainstream normal investors, family offices, institutions have less than 1%, which is not enough at all. It's crazy, actually, in this world. I mean, I've been always saying something between 10 and 25% of your whole total net worth should be in physical gold and silver. If you are really convinced of it and really love it and are a student of that sector, you can go also much higher allocations. I mean, 1/3 or even 50%. Unfortunately, gold pucks tend to have the tendency to believe in the end of the world and distrust any other investment. And then you often see gold bucks having 100% allocation in precious metals, which I think is a little bit questionable because you're missing out on so many other opportunities. And once the sector will take a pullback, it's going to be difficult. And we've also seen it's been lengthy periods of consolidations, especially, by the way, in the mining stocks, which is the other consequence that many gold bucks basically choose to act on when they believe in the end of the world. It's only physical gold and silver, which totally makes sense, and then totally over allocation in mining stocks and with the wrong timing. So that's usually the mistakes that I see. I would say general rule, thumb rule, 1/3, simply speaking, I think great way forward. And depending on, of course, on the price action. I mean, if we see silver shooting up to 500, you need to lighten up. If we see silver coming back to 30, some 1, 2, you want to increase your holdings. But 1/3, I think, is a good rule of thumb.
Okay. And you mentioned earlier that your own portfolio allocation is 50% gold, 40 silver, and 10 platinum. Is that something you would recommend to new investors, or is platinum too volatile investment for them?
So the precious metals part of my portfolio has this percentage allocation. So within my portfolio, I have about 1/3 of my total net worth is in physical metals. This 1/3 has 10% platinum, 40% silver, 50% gold. I think, again, it's an individual kind of case to be made. If you like platinum, go for it. If you don't really understand it or feel like it's a too tiny market, then leave it out. Generally, again, 2/3 gold, 1/3 silver is a good rule of thumb, generally speaking. As we see now, silver breaking out, you can overweight silver a little bit, I guess. It really has still a lot of catch-up work to do. But look, I mean, there's so many ways to this whole topic, right? I mean, there's people also investing in numismatic coins, for example, specializing in this area, or there's collectors focusing on a certain country or a certain type of coin. I mean, there's so many things to add to it, and I felt like it's always a very individual kind of thing. 1/3 of your net worth in precious metals, and this 1/3 you divide into 2/3 gold, 1/3 silver. Is a very basic general rule of thumb.
Yep. And do you typically suggest something like dollar cost averaging, or do you suggest buying larger sums in smaller amounts, I guess, or larger sums, over a shorter period of time for investors?
Again, it depends on your personal situation. Let's say you are employed and you have a monthly paycheck and you can take off a few $100 or just $100, whatever it is, and put it into metals. And that's the only way that you can basically make sure that you're saving that, do it. If you have a lot of liquidity sitting in your bank account, then you can basically also try to time the market and say, like, look, gold is a little bit too expensive here. I'm waiting now for the next 1-2 months. Maybe it comes down to 3,000, and that's where I do the most of the purchase. But if you have no metals at all, you should buy right now, because that's also something that I see a typical mistake. People wait way too long, hoping for the price to come back, and it never comes back, and then they run behind the train. So that's where dollar cost average is very helpful, and you just start purchasing and then you buy on a weekly, monthly basis. Again, it's individual answer for each investor, I would say.
Yeah, it makes a lot of sense, and obviously is a great insight, especially for any new investors coming into the market, of which there is, of course, many at the moment. Now, I want to move on to a topic, Florian, that's one of your other expertise, and that is Bitcoin and cryptocurrency. BullionStar, we were actually the first bullion dealer in the world in May 2014 to offer our customers the possibility to buy and sell their precious metals using Bitcoin and cryptocurrency, which has meant they were able to avoid the fiat system altogether. And so many of our clients really enjoy being able to take advantage of trading between precious metals and Bitcoin and ETH to take advantage of pricing opportunities as they arise in the market. So I'm wondering, what is your thoughts on this as a wealth building strategy?
I mean, I used to be a big fan of Bitcoin when I discovered it, dedicated a lot of my time, energy, and research and money to it initially. I became a little bit more skeptic over the last few years when Wall Street basically started to embrace the whole Bitcoin thing. And now I find it very questionable what's going on in the whole space. But then again, it's exciting. I mean, blockchain technology, Web3 technology, decentralization, at least the idea of decentralization are great themes. And you're going to also see real asset tokenization now moving forward. Generally speaking, I think it's very important, especially for the old school kind of gold bug guy, to really have an open mind and understand that even though the fiat money system looks kind of very shaky and questionable, mankind is still moving forward, and there's still new developments and progress in technology, and not everything will be good in the future, of course, but there's still also happening good stuff, and you need to be open-minded. And if you are able to see that gold and Bitcoin complement each other, I think you are still far ahead of most of the crowd, which is still fighting it has to be either gold or has to be Bitcoin, which doesn't make sense. We at Midas Touch Consulting have been focusing on both asset classes now for over 12 years. And of course, if you manage to play basically those two assets and you overweight Bitcoin once Bitcoin has having a great time and a big run higher, and then you sell your Bitcoins to a certain extent and move into gold, and then gold goes up and Bitcoin consolidates or corrects, which typically, I mean, the Bitcoin pullbacks are insane. So it is actually advisable at some point, if you get these crazy rallies in Bitcoin, that you take some money off the table, because in a bear market, in a pullback, in a corrective cycle, Bitcoin loses between 70 and 90%. So if you manage during those pullbacks to sit in gold, wonderful, because then of course, the ultimate goal is to have more ounces of gold and more Bitcoin combined. So I'm playing the Bitcoin gold ratio. I think I've been one of the first ones to publish charts on it and look at it. I'm doing this for more than 10 years now. And it has been trading between 10 and 40 at the moment, meaning for one Bitcoin, you have to pay between 10 and 40 ounces of gold. That's been the range over the last 4 years, roughly speaking. It's volatile, but if you can manage to basically sell your Bitcoin and buy gold once Bitcoin is overvalued and gold is undervalued, yeah, you can increase your net worth drastically, but it's difficult. Especially Bitcoin is a very volatile market. For those who play those two sectors and have a bit of an understanding of the market and also a little bit of trading understanding, I definitely recommend that strategy, yes.
Yeah. Well, I mean, you've said it, we're in an extremely volatile environment at the moment. So how do you recommend people manage the emotional side of investing in such volatile environments?
Meditation, long walks in the nature, a good book, moments of silence. It also always helps to write down if your mind freaks out, because the market's also volatile. Just write down your feelings, your thoughts, your fears, whatever it is. So then you have it on paper and basically can take it out of your mind and you get some space. Look a little bit more rational at the markets. I'm a big fan of meditation. I think that's very helpful to calm down your inner thought process and get more clarity. Markets are a wonderful machine to make money, a wonderful opportunity, but at the same time, it's a very difficult game. Usually, in the end of the day, you play the game with yourself. You have to learn a lot about yourself along the way. And of course, self-discipline, planning ahead, following your plan, but also being patient, which is often a big issue for many people, or not doing anything, not doing your homework. That's also an issue that I've seen often with people, like not doing anything and believing the money will just come to you. Look, we are in 2025 now, and you can make money with your computer sitting at home trading these markets. It's wonderful. I mean, when I started out 30 years ago, when I bought my first stock, this was impossible to even think about. I mean, we didn't even have real-time pricing.
Dial-up internet.
I mean, we came a long way, and the opportunity is wonderful. But of course, it's also very tricky, because once you turn to YouTube, after our video here, probably people will get bombarded in their timeline with lots of other videos. And then in the end of the day, you don't even know where it's up and down, and you're just getting confused because there's so much opinion out there, right? So that's another one, like focus on a few people rather than studying too many. Follow a few people, and that's probably enough.
Yeah. So mindset's really important. So I think that's a really great takeaway from today. And I think another key takeaway that I've gotten from you today is that timing the perfect entry is less important than being positioned before the train leaves the station. So that's been one of my other big takeaways.
If I interrupt you, but very important, the exit is the important thing, right? That's something that people always forget, because that's where you actually make the money. People always are focused on the best entry, but the important thing is the exit. We mentioned that before when I said at some point you will see silver going nuts like crazy for a few weeks, maybe. And then at 500, maybe in a few years, it will be such a crazy spike up, and a week later it will be at 150 already. If you miss that selling opportunity, all your entry planning and stacking basically got not really rewarded in the end of the day. So the exit is much more important. Again, scaling out, we have a quad exit strategy that we use at Midas Touch Consulting, is very important. So I think people should focus much more on exits, actually.
Yeah. And do you suggest that they take profits along the way, or do they wait for the parabolic move in gold and silver before they take?
Yeah, into a parabolic move, you need to have a strategy to take exits.
Okay, good advice, Florian. Thank you. Thank you so much for sharing your insights today on how to navigate this exciting moment in time with confidence. For those who want to follow your work, where should they go?
Well, we have our website, midastouch-consulting.com, where usually we post all the recent analysis, gold, silver, Bitcoin, mining stocks. We have a free Telegram channel. I know there's lots of Australians actually as well. It's free. It's a mastermind group of people interested in precious metals, mining stocks, and Bitcoin from all over the world. Yes, sometimes the Germans take over and only chat in German, but overall I only post in English, and generally it's international. So people should not be afraid or worried if they see too many Germans talking there. And then I have a Substack where I send out my daily calls for gold and silver. It's also free or of charge. People should just subscribe to it. I think it's a valuable tool if you want to get a little bit more understanding of the short-term situation, and maybe more of a trader also in the gold market. And thanks to people like you, I'm also very active on YouTube.
Fabulous. Thank you, Florian. I hope we can do this again soon. If you found this interview valuable, be sure to like and subscribe to our channel for more content. And if you'd like to receive 10 grams of silver for free, you can find our sign up link in the notes below. Thank you to our audience for joining us. I'm Claudia Merkert from BullionStar, and I look forward to seeing you next time.